Hi everyone, welcome back to Be Rich. It's me, Vinod. I hope you had a wonderful Monday and a wonderful way to start the week. Yes, the markets were here and there through the day. I hope you managed to do a bit of tiffin coffee. Today I could only do one Hero Motor Corp because that is already a bit out of my budget. But I had saved some from last week so I can make sure I could get one Hero Motor Corp under my belt. And that's all I did. Some of you I saw had done some Jyoti Labs, have done some this and that. So I'm happy that you managed to invest in Tiffin Coffee range. There is still a lot of anxiety after last week's what happened with NATCO. I can understand that. So I just want to tell you, even like Anand keeps saying, you should be ready for the stock to go to zero, the stock to go to zero. So what does that mean? Briefly, before I get into the main topic of the day. What does that mean is the market can beat a stock even if this company is it's got a business running. The stock price has got nothing to do with this. They're two separate things. This is a business here, it is running, it's been running for a long time. And then you have the stock market where it tries to value this business. In a maniacal way, it tries to look at over the fence and try to value this company which is doing this business. So it's like that. It's like trying to see a horse race and determine if this horse is a good horse or not. But it's still a horse. That means there is a business there. There are assets there. There are physical things happening there. There are people working there. The stock market price of a share going up and down doesn't mean business turns on and off or more people are hired, more people are fired based on the stock market. It's not that. There are two separate things. So even if a company is beaten down, hypothetically to zero, it's not happened. But if it does happen, then the business still keeps running. Of course, this isn't taking in with a caveat, it's a good company. There are companies which have done a lot of fraud, run very poorly, which have disappeared. Yes, even those companies will come down to 1 rupee, 2 rupee before it finally gets delisted. So remember that. And this is why we pick companies which have zero debt, which have a good business and try to have a moat. So even if the market pushes the stock price down, we know fundamentally this is a good company. There is an underlying value there. And that's why we look at something called the book value. That means even if the company goes busts, the book value is the intrinsic value of the company. At least that much you're assured back. So if you're buying it below book value, that means you're actually putting money in and you're going to actually get more money if the company goes bust, theoretically. This rarely happens. What usually happens is, even the case of like Suzlon, the company is going through a bad phase, they delist the company, take it private, they fix it, then they come back to the market and looking for fresh capital, they issue shares again and they relist themselves. This can happen, and this happened lots of times in histories with lots of companies. You can research about it. So these things happen. So as an investor, this is the main reason why we look for zero debt and good companies, and these are opportunities. Markets can swing. Doesn't mean the business is disappearing or the factory disappeared or the workers disappeared. Keep that in mind as you hear of all this. There are two separate things. It is a way a bunch of people are trying to value something. Doesn't mean it goes away. Simple thing as even your house, you live in an area, in a certain house, you've been living in that area for 30 years, let's say. Your grandfather would have bought it maybe for a couple of lakhs and today it's worth crores. But you living in it, you do not see any significant change in your life based on that. All that is outside. Same is true with businesses and book value. Today I want to talk about Tejas Network. This company was founded in 2000. They specialize in optical and data network products. They offer solutions like optical transportation, broadband access technologies. Who uses this? These are meant for usually telecom companies, governments, defense, utilities, and they're present over in 75 countries. They have 440 patents. They're one of the top global suppliers for optical aggregation, right? Why am I talking about this? I'm talking about this company because I've been looking at this company for some time. The reason why I've been looking at it is I always see and try to keep my nose and see what the Tatas are doing, where they're putting their money. And 2021, the Tata Sons acquired a controlling stake in this company. Since then, I've been very much interested in this company. And thanks to Mr. Market today and what is happening globally, this has come into consideration range as I see it. It's a great company, doesn't have debt. Tatas are in it. And is it just because Tatas are in it, you're looking at it? Well, no. There is more to this story. More to the story is, currently the guy running it, his name is Anand Srinivasan. He's the CEO of Tejas Network. He has 25 years experience in telecom and networking. And before he joined Tejas, he was the Executive Vice President and Chief Development Officer in another company which does something similar called Juniper Networks. You guys can research about Juniper Networks. And he's the guy who's done a bachelor's in electrical engineering. He's basically an engineer. He's done computer science, MA. and he's done an MBA too. So he's a highly qualified person with 25 years experience, and Tatas have invested, and this guy knows what he's doing. Who was this guy running it before? It was started by a guy called Sanjay Nayak, who was a CEO and managing director for this. He was a guy who co-founded this company, and he stepped down in, I think, 2022 when Anand joined, right? Sanjay Nayak, who's co-founded the company, is still holding a lot of shares in this company. He has not sold himself out, but it is run now by Anand. And who's the chairman of Tejas Network? It's not Sanjay Nayak. It's actually a person called Ganapathy Subramaniam. Who is Ganapathy Subramaniam? Well, Ganapathy Subramaniam is a well-known industrial leader in IT and network-related industries. And most importantly, he's a chief operating officer of TCS. So the chief operating officer of TCS, the COO, is the chairman of Tejas Network, right? So you can see how Tatas amalgamate and put things together into place. And Tata and Sons have been doing this for some time. And he has a strategic mind, this Ganapathy Subramaniam, and he's aligning all these things for Tatas. What is he aligning? Well, what he's aligning is what I wanted to talk about. So let's jump into the analysis of this. Why is Tata and Sons doing this? Well, they have a long-term vision, right? And the long-term vision for Tatas is technology, energy transition, and making things in India, making things locally. These are three things they are looking at in the long horizon. And if you notice, their investments recently have been focusing on telecom, IT, energy, semiconductors, electric vehicles, and consumer retails and financial services. These are things Tata and Sons are slowly putting their money into. And they have committed already 70,000 crores worth of investments in these subsidiaries, associates, joint ventures as of March 2024. 70,000 crores. You can see that's a vast amount of money which they've committed to this. And a key part of this is the Tejas Network. Why is Tejas Network a key part? Well, they've acquired this stake through another company of theirs called Pantone Finvest. It is not directly Tata and Sons, you won't see that. If you go and open and see who owns Tejas Network, you'll see a company called Pantone Finvest. Pantone Finvest is actually owned by Tatas, and they're the ones who are owning 56% of Tejas Network. So it's a controlling stake. It is not like a small stake, like how Microsoft has an open AI. This is a 55.6% stake, right? Which they've invested in 2021. 1,850 crores they put in. Okay, and they've given an additional open offer of another 26% stake to expand into controlling this company. Why? Because Tejas Network specializes in 4G and 5G telecom gear. They enable Tata to compete globally with Ericsson, Nokia, and Huawei, right? It aligns India's goal of developing things in India. So you're no more dependent on Ericsson giving you technology, or Nokia giving technology, or Huawei giving you technology. Indians, Tatas are going to be developing all this in India, on Indian soil, and this is going to be a great thing. Of course, the government is giving them a lot of benefits. This is also motivation for Tatas. It is known as the PLI scheme, which is a product-linked incentive scheme, which is boosting domestic telecom solutions. And the market cap in 2021, it was 2,000 crores. And now it is well past that, probably I would say around 6 times that where we are today. So it's grown, the market cap of this company has grown by 6-fold. That means double it. So then you'll get where I am. So what is this? Tata Sons' broader investment portfolio includes Tejas Network for the simple reason. In technology and telecom, you have TCS. That is why the guy who's the chief operating officer of TCS is sitting as the chairman of this company. It helps them strengthening their Tata Communications, their digital infrastructure, cloud services, which they're going to do. And in that same thing, they have taken a 64-65% stake in a Bangalore-based semiconductor design firm called Sanyak Labs. So that's towards supporting their 5G plans and their broadcasting technology, which they're working on expanding in. So this is just in IT, right? The same way Tata and Sons are expanding in energy manufacturing and automotive and aerospace and in consumer retails and in financial services. That is the plan for this week. Like today I spoke about Tejas. Each day I'm going to hit 1-1. So I started off with technology and telecommunications today, what Tata Sons are doing and why Tejas Network should be on your radar, why it's there in my radar, and if it comes in reach, I try and reach for it, right? So I hope you feel inspired and you dive and research into this. The funny thing is, One of you who follow me on Instagram, who's in our 52-week Tiffin Coffee Challenge group, spoke about this. And I said, yes, even I have it on my radar. And I said, should I talk about this on a video? And that person said, please do. So here we are talking about it. So tomorrow I'll talk about energy and manufacturing. Wednesday I'll get into automotive and aerospace. Thursday we'll talk about consumer and durables and retails. And we'll finish off the week with the financial services. So that will give you a broad outlay by end of the week what all Tata and Sons are trying to do, where all are there opportunities for small retail investors like us, especially in times like this when the market is shaking, rattling and rolling, where we can find some solace maybe. Thanks for watching the video as always. I do enjoy spending this time with you in the evening, having these short conversations. I've been asked to look at maybe doing longer formats during the weekends. I'll try and work on that and offer maybe more value during those longer breaks when you guys have during the weekend and have a longer conversation about investing. As always, be safe, enjoy, get ready to get back at it tomorrow. See you tomorrow evening with another one. Bye.